it's easy to get swept up in the emotion of trading. Fear, greed, excitement, all of these can impact your decision-making. But when it comes to trading, it's essential to stay level-headed and make rational choices. In this video, we'll share tips and techniques to help you control your trading emotions. As a trader, it's easy to get caught up in the emotional ups and downs of the market. Fear, greed, and excitement can cloud your judgment and lead to poor decision-making. However, successful trading requires a level-headed approach and rational choices. It's vital to learn how to control your emotions and stay focused on your strategy. This video provides valuable tips and techniques to help you manage your trading emotions and maximize your success in the market. As traders, we should always prioritize logic over emotions. Conducting trades while in a heightened emotional state can lead to significant financial losses. It is crucial to stick to our long-term investment plan, regardless of any short-term market fluctuations. This requires us to remain calm and composed, even in times of market volatility. In other words, emotional discipline is a prerequisite for successful trading. Therefore, it is essential to approach each trade with a clear and objective mindset, backed up by thorough research and analysis. Taking the time to evaluate the market situation before making any decisions can help us achieve our investment goals. It is imperative for traders always to prioritize logic over emotions. Whenever we make trades while in a heightened emotional state, we increase our potential for significant financial losses. Our long-term investment plan should always take precedence over any short-term market fluctuations. Remaining calm and composed in times of market volatility is the key to sticking to our plan. As traders, we require emotional discipline as a prerequisite for successful trading. A clear and objective mindset, backed up by thorough research and analysis, is essential in approaching each trade. Taking the time to evaluate the market before making any decisions can help us achieve our investment goals. I will give you 4 tips that will help you to better manage your emotions and start getting better results in your trading. When traders begin trading in a financial market, they deal with an extensive range of uncertainties and emotional pressures. A well-structured trading plan functions as a blueprint for traders to navigate through these uncertainties. A trading plan is instrumental in allowing traders to remove random trades and emotional bias from their trading decisions. It assists traders in making informed trading decisions while reducing the risks associated with trading. A trading plan takes into account the trader's financial goals, risk tolerance, and trading style, and helps in streamlining trading activities. Traders can efficiently allocate their resources and match their trading strategies with their objectives to maximize profits with a trading plan in place. Additionally, the trading plan helps traders evaluate trading performance, identify weaknesses, and refine the strategies for future trades. The trading plan enables traders to keep a long-term outlook, ignore distractions, and adhere to a disciplined approach to achieving their financial goals. Creating a trading plan may seem like an additional task, but it is essential to alleviate the risks involved in trading. Traders can handle the disappointment of a losing portfolio, get more confident in decision-making, adhere to the set plan, and perceive trading as less stressful. During the trading process, emotions such as fear and greed may affect the decisions and lead to poor trading outcomes. However, utilizing stop losses is a useful technique in managing the risk and reducing the emotional impact on trading. Stop losses are predetermined orders that traders can place to automatically close their position when the price reaches a certain level. By setting stop losses, traders can limit their potential losses and avoid making impulsive decisions based on emotions. Additionally, stop losses can provide a sense of security and remove the stress of constantly monitoring trades. For example, a trader can set a stop loss at 5% below the entry price, ensuring that the maximum potential loss is limited to 5%. Overall, using stop losses as a risk management tool can help traders control their trading emotions and make rational decisions. The importance of monitoring your emotions while trading cannot be emphasized enough. It is crucial to be aware of our emotions, whether it is through keeping a trading journal or using emotional tracking tools to identify emotional triggers that might influence our trading. By analyzing our emotions, we can take control of them instead of allowing them to dictate our trading decisions. As highlighted by the trading expert, it is of utmost importance to constantly monitor your emotions when you are trading. This means being mindful of your emotional state, whether it is excitement, fear, or anxiety, and recognizing how it can impact your trading decisions. To achieve this, it is highly recommended to keep a trading journal or utilize emotional tracking tools to identify emotional triggers that could influence your behavior. By analyzing your emotions, you can take control of them and prevent them from clouding your judgment. Additionally, keeping track of your emotions can help you identify patterns that might sabotage your trading success and enable you to modify them going forward. Remember, awareness of your emotions and utilizing techniques to control them is key to achieving success in your trading journey. Monitoring our emotions can also help us to identify patterns in our behavior that might sabotage our trading success. So, remember to keep a close eye on your emotions and use techniques to control them for a successful trading journey. Another helpful hint for controlling your trading emotions is to take frequent breaks. This is an important technique for managing your emotions while trading and can be highly effective when used regularly. Taking breaks while trading is crucial to maintain focus and improve your overall well-being. However, it's equally important to make the most of that time to rejuvenate your body and mind. For this purpose, you need to develop a well-planned break routine that includes activities completely unrelated to trading. Simple activities like going for a walk, getting some fresh air, listening to music, or practicing meditation can help reset your mind and improve your focus. To ensure that your break routine doesn't disrupt your trading strategy, plan your breaks around the market movements. Take breaks during non-volatile periods and avoid critical points in the market. By aligning your breaks with the market movements, you can come back to trading more refreshed and better equipped to handle its emotional challenges. This will improve your performance and overall well-being, and you'll be able to make better trading decisions. Put into practice what you have learned today. Keep a calendar from today, how your trading has changed by following these small tips, but they make a big difference in your day trading. Leave me in the comments about your evolution as a trader and on what other topics you want us to do more videos. See you next time.